What if there was a way for you to make a lot more money in your business today? A tip that I could give you in this video, or actually show you how you could leverage whatever it is you're doing today to literally double the amount of money that you make in your business. Would that be worthwhile for you? If it is, then you're absolutely watching the right video. My name is Zevi Shafran. I'm an owner of a wholesale mortgage company called Loanbrook Inc. in Los Angeles, California. I'm going to share with you what I am doing today and have been doing over the past 10 years to not only originate loans, but to be able to maximize the amount of money that I make. So if you're ready, let's dive in. Let's get started, all right? So the way you're operating now as a residential loan officer, if you're already in the business, maybe you're thinking about getting into the business, there's really 4 buckets of ways for you to be able to make money. And I want to go through all 4 of them and then basically show you how you can maximize your time and effort to be able to make a lot more money doing whatever it is you're doing right now. All right, so let's start with the obvious. If you're a loan officer and you're either working for a broker or a bank, more than likely you're originating agency loans. And now these agency loans are basically a commodity. The reason I say that is because you're using tax returns to basically originate mortgages that are sold off on the secondary market to buyers like Fannie Mae and Freddie Mac, right? And these guidelines are national guidelines, which means that a borrower with a W-2 could walk into any bank typically and get that type of a loan. So therefore, I wouldn't consider that, even though it is a very lucrative thing as a loan officer. Typically, you make anywhere between 1 or 2% commission if you're not on the banking side to originate those type of loans. Sure, they're great, but the problem is with those loans is that they can get them done anywhere, right? So to be able to become a specialist doing agency loans would mean that you would have to do one of 2 things: either market aggressively, have a very large following of real estate agents, or even number 3, solicit a very particular crowd. Example, if I was soliciting nurses or firemen or police officers, this would be an amazing thing to do simply because these people are wage earners, meaning that they have a payment that they get every single week, bi-weekly, semi-monthly, monthly, right? But they're easy to size up, which means that for you to be able to get somebody like that in the door, give them a loan, and then move on should be very simple, all right? So that would be the first way that you're making money. Now, if you're slightly outside of that box, then you're also offering non-QM loans, which, would also be considered subprime loans, okay? And then that might make you a little bit more of a specialist because now you're basically targeting people who have non-traditional income, because in lending in general, and I don't know you watching this what your level of knowledge is, but lending is like waterfalls, right? You're checking off assets column, credit column, income column. They don't really cross with one another. Each one of them is separate. And the one thing that makes, of course, non-QM different is that you could use alternative sources to qualify the income, whereas most of the other guidelines remain the same, right? So if you're that originator and you have that going for you, then great. That kind of separates you slightly, but it's not going to make a significant impact, especially in today's market, on the amount of money that you're going to be able to make. So where exactly are you going to be able to shift gears, offer something that somebody else doesn't, and significantly make more income? Let's talk about that. 10 years ago, I learned about something that completely blew me away. And when I saw the amount of money that was being generated by using this particular system, I realized very quickly that the money wasn't really being made on the residential side, but rather operating in this capacity. And let me explain to you exactly what that means, all right? I was introduced to something called the term sheet, the LOI. It's also known as a letter of intent, a letter of interest. Now, on both of those programs that we talked about earlier, right? We talked about 4 buckets. We only talked about 2, though, would be the agency and the non-QM or subprime. You'd still need to collect and document the borrower's basically ability to repay. So on the agency side, you're collecting tax return, pay stubs, whatever it may be. On the non-QM side, you may be collecting profit and losses, bank statements, whatever it is to document that this person can qualify for these programs. However, when you draft up a term sheet, an LOI, you're now offering two different type of programs. It's designed specifically for brokers who offer private money loans and commercial financing. All right. So now you might be thinking, Zevi, I don't know anything about private money or commercial loans, right? But if you take a couple steps back, you would realize that in most cases, unless you're a bank, typically on this end of the business, you broker out to either a QM lender, a non-QM lender. So the only difference in drafting up a term sheet is now you are brokering to either, again, if you're going private money, to either a private investor, a fund, a deed of trust investor, a debt fund. I mean, it's kind of like the same terminology, but that's basically where the loan is going to make a credit decision. And then by doing that, depending on their appetite, much like, like a person that cannot document their income could not go to a QM bank, you have to take them to a non-QM lender. You would know the same thing about a hard money lender. As you get involved in that arena, you would realize which investor has an appetite for what type of a transaction. Now, those type of transactions also not only, but include bridge loans, fix and flip loans, rental loans, construction loans, mid-construction loans, rehab loans. I mean, all that, right? So that opens up a tremendous opportunity. Now, if you're not doing that now, by learning on how to put together a term sheet and an exclusivity agreement, you could very quickly collect an additional 2 points and close a deal in a week to 10 days. When I learned about that, and I started putting those deals together, I realized how much money was coming into the company so much quicker than having to deal with the borrowers on the conventional end, that it drew a lot of my attention and focus to want to primarily focus on borrowers who needed these type of programs, okay? The ability to work with somebody who knew that they were not qualified to get any other type of a loan gave me the upper hand and a ton of leverage, right? Because think about it, like we talked about earlier, when you're a commodity offering something that anybody can, when a borrower is a W-2 wage earner and they walk into a bank and you're saying, wait, but I'm also a wholesale lender, I could give you that type of a loan. A lot of the time it's a tennis match with, who can offer the best rate. But if you have a borrower who cannot qualify, not there and not with bank statements, the only way they can qualify is with the amount of money that they're going to put down and the equity in the deal. Then you have a lot more leverage because they need your help. They need your expertise. And now it's not very difficult to charge your 1 to 2 points. And in addition to it, you're able to close the deal in 1 to 2 weeks, let's just say. So that makes a tremendous difference in the amount of money that you're able to bring in as an originator if you're not doing this already. All right. So that was bucket number 3. I want to shift to bucket number 4. On the same type of wavelength, when you're talking about commercial financing, and I know what you might think, well, I don't know how to do that. We'll get to that in a minute. Same concept applies. You realize where these type of transactions might be able to be parked. Now, when I say that, what are those type of transactions? Well, it could be an owner-user commercial deal. It could be apartment financing. It could be investment or owner-user on any scale. It could be hospitality. It could be healthcare. It doesn't really matter what it is, because if you work with the broker, if you work with the lender who is able to offer that type of a product and you act as the consultant, as the broker, then once again, you are so much more of a specialist than you were trying to offer something that the whole world offers, which is residential refinance and purchase loans through Fannie and Freddie Mac that are available through every other bank. Now, the elephant in the room is that all sounds amazing, but where exactly would I learn how to originate private money loans or commercial loans? And by the way, when you do originate commercial loans, you also have that same opportunity to originate not only through banks and funds, but also through private money investors, kind of leaking into those same buckets, whether it's a deed investor or a debt fund, right? Will be a pool of investors. So the opportunity changes dramatically, and so does the skill set, and so does the level of need from the borrower, because now you're viewed as a specialist. They can't walk into anywhere. They need you to help them out. So talking about how could I learn as an originator, how could I learn more about this opportunity, how could I learn how to do it? I have spent 10 years learning how to put this together, and what I have done over the past year is I've put together something that I call the part-time Commercial Lender Academy, and it's available for you via link in the description below. You could check it out. It's basically a very simple, easy to follow roadmap that would be able to, as an originator, show you how to take a transaction from start to finish with all my proprietary forms that are included. Now, if somebody was to talk to me or have this type of a conversation and explain to me what I would be able to do in the first year or two when I got into this business, this would literally skyrocket the amount of income that I would be able to make, assuming that I actually took advantage of the opportunity, learned more about it, and applied it. I can tell you what exists in the market, regardless of where interest rates are, because private money financing in any market lies somewhere between 10 to 12%. So it doesn't really matter. The opportunity is there. And you might think, well, why would somebody want to pay that? Because you might be competing with multiple people to try to purchase a property. You might be trying to buy a property that has huge potential, but is not financeable, meaning it doesn't have toilets or floors or cabinets. You have to get a private money loan to be able to get that particular loan. What if there's a bunch of cash offers that are willing to purchase a property that you know you could flip for a profit? All those would be reasons why somebody would want to use private money to purchase a piece of real estate, because even though it's more expensive, the cost is a part of doing business. On the flip side, why would somebody want to do a commercial deal? Because there's just as much commercial real estate there is out there as there is residential. It's just that if you haven't put your toe in the water to learn about it, then you've been oblivious to it. On the contrary, when you want to make larger commissions, then you typically think, okay, larger loan amount. So I'm going to go deal with what? A luxury agent in a very fancy community where home prices are significantly higher. It may or may not be the type of person that you are. You may or may not have that level of comfort to get into that pool. However, if you're a commercial lender, then you're competing in that arena because all the loan sizes are significantly bigger than they would be if you're just trying to refinance or do a purchase loan on a residential property. Hopefully that makes sense to you. Now, one other thing that I'm going to throw in there is that over the past few years, people have locked up some pretty low rate interest loans, right? But that doesn't apply as much in the commercial space simply because the loans are only locked up for periods of 3, 5, and 7 years, most typical. So even though people locked up, rates between 2020 and 2022 in the low rates, because in commercial lending, those loans open up all the time, the owners have to make a decision. Do I refinance or do I sell? There is no other option, which means that your services are going to be well needed regardless. All right. So if you want to learn more about it, check out the link in the description below, Part-Time Commercial Lender Academy. It's all there for you. We've covered a lot of ground. So if you have any questions, please drop them in the comments below. I would actually love to know what the takeaway was. What are you doing now? Do you feel like this information that I gave you could actually open doors for you? If it could, then I would love to know about that, all right? If you enjoyed this video, please give it a thumbs up. And if you want to see more videos like this in the future, I would highly appreciate if you subscribe to the channel. Otherwise, thank you for watching. Check out the Part-Time Commercial Lender Academy in the description below, and I'll catch you on the next video. Take care.